Every week, it's my goal to share financial information that helps you both in your life and your financial vineyard. We take you from your roots to the journey of your vines and the influences in the air that have helped craft your delicious life. Like wine, life and finances have different palates that should be celebrated and not judged. Welcome to this edition of Wine and Dime with Amy Irvine. This week, we are going to be talking specifically about long-term care, life insurance, and disability insurance. I know these are not things that people enjoy talking about, but they're important for people to understand. We want to make sure you're getting the most out of your employee benefits specifically and solving some of those financial problems that come up in those life events. But before we get into that, I'd love to share with you my wine recommendation this week. Sticking with our theme of Cab Francs, check out McGregor Wineries off from Keuka Lake. McGregor has been well known for their reds, although that's not all that they produce. But their Cab Franc is something that my husband and I very much enjoy, and we enjoy the scenery from that winery as well. It's been a journey for them, and we encourage you to hop on over to their website and see what they have to offer for you. But our recommendation, Cab Franc, and if you really want to go big, Cab Franc Reserve.
Remember, your employer has negotiated discounts for solving those problems. In addition to subsidizing these programs, some of the costs are well below where you can get them on the open market. Sometimes health issues are also not considered when you are enrolling into your employee benefits, which can allow people to get a benefit that they would never be able to get outside of their employer plan. So, let's explore. Okay, so the most recent research has 100% of actuaries in full agreement on one thing. We will not live forever. I know, corny joke, right? In all reality, if a spouse, child, or anyone else depends on you financially, then taking advantage of a group coverage policy is really an easy way to solve the problem. With that in mind, it is important to think about a few different things. First, if you don't have enough life insurance coverage, then don't pass up this opportunity. It is really easy usually to sign up for this, and it doesn't generally require a medical examination. Often employers will give you a minimum amount of coverage, sometimes ranging from $25,000 to $50,000, and also offer the option to get 1 or 2 times your base salary for a minimal monthly cost. If you have a spouse, you may also be able to get some coverage for them to help offset expenses. Think a child's partial education, child care, paying off a portion of your mortgage or funeral expenses when you're thinking about that. Second, it's easy to think, I'll go out and find better coverage, or let me figure out how much it might be externally, and that way, if you leave the job, you can take it with you. But often people get busy and they end up postponing this decision and not having coverage. The coverage is so cheap and the underwriting requirements are so easy that it just makes no sense whatsoever to wait. One of our colleagues, Carol, she shares a story that she had a client who made that decision to get it outside the company, and when he went to get individual coverage, sadly, they uncovered cancer. He ended up with no life insurance coverage and ended up actually leaving his company, so his base policy actually disappeared at that point in time. If you have coverage, usually with group, especially group supplemental coverage, you can usually convert it when you do leave the company, which if you become uninsurable, at least, you have that policy. But remember, you do have to do that within the required time frame. Basically, this is how Carol was able to get coverage for her husband at the time. Bottom line, you really want to cover risk now and then use next year to find the most effective plan. We can certainly help you with that, and we want to make sure that you have the right amount of coverage in that situation. To determine how much life insurance you need, we also include the link to our resources. There is a free Life Happens life insurance calculator to make it easy and quick. The resources can also be found in the online classroom. One of the biggest risks to the financial security faced for those under 60 is disability. More than 25% of people in the workforce will experience a disability prior to age 65. That results in significant lost income. Unless you have all the money accumulated you will need until your death, you may need disability coverage. Take what you can get. If you need to cut expenses, you can see if there's a longer elimination period. If you do that, you can save the premium dollars to increase your emergency fund. Sometimes there's optional supplemental short-term disability coverage, and it's usually pretty darn cheap. Sometimes we hear from clients that they think they can't afford it. The truth is that you can't afford not to have it. Really, give one of us a call to find a strategy that will work to help you pay for it. Sometimes just cutting back on a family meal or two a month, meaning family meal out once or twice a month, can help offset the cost of what could be a long-term financial strain. If you can't tell, we're pretty serious about this. Get it, get all of it.
So let's switch gears just a little bit here. We're going to be talking about something that's cropping up more and more with employers, and that's long-term care insurance. We covered long-term care in our retirement class because it's one of the biggest threats to a secure retirement, especially towards the end of retirement. Taking care of our health in the future is as important as taking care of it now. More than 50% of seniors will need some sort of long-term care, whether that's facility or in-home care. The bad news is that over half of those who are 65 will have some sort of health condition that will prevent them from getting coverage. The industry is changing rapidly as baby boomers are defining what they want and what they need. We strongly urge you to address long-term care and long-term care insurance when you are between the ages of 40 and 55. Now, if you have a financial planner, talk to them about this and make sure they're either bucketing for it or that they are looking at long-term care and at least running the analysis for you. It's ultimately up to you, but you should know what your options are. So here's what to know if the benefit is offered through your employer. The great news is the premiums are tax deductible. If you have a chronic condition now or a family history that may require additional care in the future, this may be the best option for you getting coverage. There's still some underwriting requirements even through an employer, but it's worth exploring this. Now, the details are beyond the scope of this class, so definitely reach out to the provider that's listed and again to your financial planner if it is option so that if it is an option so that you can navigate through all the details.
And switching gears again, now we want to talk about contributions to your retirement plan. If you haven't already heard that not taking your employer match is equal to leaving free money on the table, then you'll hear it again right now. There aren't too many options for free money. So we like to encourage our clients to put at least the percentage that is necessary for your employer to make their full match. Sometimes this may be equal to 3 to 9% of your base for them to match your contributions. Consider increasing your contributions at least by 1% until you're saving 15%. That's 15% of your income, and that does include the employer match. Start higher, and then if you find that it's too much of a strain on your budget, you can always reduce your contribution. Double check with your employer that they allow reductions at any time. We've never heard from our clients that they regret putting too much money away when they got to retirement. Often we hear that they could have done just a little bit better and wish they'd saved a little bit more. So don't wait until you're retired. Do a little better with this open enrollment season. We encourage our clients to explore any optional benefits that they may have available at their company, and that can really help in bringing a solution to the table for life's problems. Even better, it might even improve and help you get ahead financially with some careful planning. Some of the options that we want you to be aware of include a stock purchase plan where you can buy your company stock often for a 10 to 20% discount. And you can use that for college funding, gifts, any other financial goals that you have. If you have corporate benefit options like executive benefits, non-qualified plans, non-qualified deferred compensation plans, or other types of plans, we ask that you reach out to us. This is an area that requires a higher level of expertise that we're able to cover, and we can certainly talk to you one-on-one, but we also want to take into consideration any tax consequences to those recommendations. If you have access to wellness program that both gets you healthy and saves you money, we say get physically fit. Some of the wellness programs include participation in Fitbit and weight loss challenges, smoking cessation, attending and recording how many times you've gone to your favorite fitness class. This all helps save money right now, get you healthier, and of course help you remain healthy as you get older. So some companies also provide financial incentives for family participation, and they pay for like gym memberships and those kinds of things. So you want to be sure to ask for those details. Other programs include discounted event tickets, phone service, and even car insurance. Of course, this could save you money on a monthly basis and even free up money for other future benefits as discussed. Finally, did you know that we definitely offer our services on a voluntary employee benefit basis? Introduce us to your HR department and maybe you'll see us on your next open enrollment. The point is that we want to look at all of the benefit options that your employer works so hard to give you access to, and we don't want you to see them as products. But as always, we want you to see them as an ability to solve life's inevitable curveball.
We hope you've enjoyed this podcast, and we'd love to hear from you on other topics that you'd like to hear about. Please feel free to share this with your friends, like us on iTunes, visit our social media on LinkedIn, Facebook, and Instagram to stay up to date on what's going on in the world of finance and other important topics that we want to get out there. Don't forget to also visit our website at www.rootedpg.com. We'd love to hear from you.
And that will about do it for today's episode of Wine and Dime. You can contact Amy through the website, www.rootedpg.com, or amy@rootedpg.com. You can also follow us on Facebook and Instagram at rootedpg for the latest news. And if you have any questions, comments, or topics you would like to hear about, feel free to let us know. And don't forget to rate and subscribe the show wherever you get your podcasts. And again, thank you for listening, and be sure to tune in next time.